Hello and welcome. I am going to discuss perspective, patience, and realistic expectations to help us be successful. Let's begin by defining what we mean by perspective and patience. Perspective refers to the way we see things. It's our viewpoint, the lens through which we interpret the world around us. Our perspective shapes our thoughts, feelings, and ultimately our actions. Patience, on the other hand, is the ability to wait calmly and with a positive attitude, even in difficult or frustrating situations. Patience allows us to handle stress and challenges in a more effective way and to make better decisions. When we have a positive outlook, we are more likely to see opportunities and solutions rather than challenges and problems. We, however, have to be realistic and not over-optimistic. You see, being patient, we give ourselves time to think and to react. This helps us to avoid impulsive decisions that we rather regret. It will let you think about things and be realistic about things as well. I remember a time when I felt frustrated and overwhelmed, but then I decided to take a step back and then see the situation from a different perspective. By doing this, I was able to find a solution that I never would have seen if I acted impulsively. How can we develop and maintain a positive perspective and be patient? Number 1, you must connect with positive people that you want to emulate and become like. Number 2, wait for confirmation. Create a system that will control your emotional reactions. Number 3, practice makes perfect. Just keep on trying and never give up. Number 4, keep your eyes on the long-term goal. Realistic expectations can play a crucial role in developing and maintaining a positive perspective and patience in trading. In the fast-paced and volatile world of trading, it's easy to get caught up in short-term market movements and to make impulsive decisions. However, by setting realistic expectations, traders can avoid these pitfalls and find greater success in their trading journeys. Set realistic expectations for yourself to recognize that some things take time. Trading can often be a roller coaster of emotions, with traders feeling elated one moment and discouraged the next. However, setting realistic expectations can help to mitigate these emotions and provide a stable and level-headed approach to trading. It's important to understand that trading involves risk and there will be losses along the way. By acknowledging this and setting realistic expectations, traders can avoid becoming disheartened by short-term losses and instead focus on long-term goals of their trading strategy. By avoiding getting caught up in short-term market movements and emotions, traders can remain focused on the bigger picture and on the underlying trends and drivers of the market. This allows traders to make informed decisions that are aligned with their long-term goals and to avoid getting sidetracked by short-term market fluctuations. This ultimately leads to more consistent and profitable results and greater success in the world of trading. I want to show you some practical examples how you can see the scale and impact of this. Based on what I work with, we can only enter a trade when it reaches a point of interest and depending on the behavior of the price, based on if it rejects or breaks past the point, we will enter. So, we wait. We have to be patient for this to first get there to confirm our theory or idea to be correct. We created a realistic idea based on previous behavior we investigated. It formulated a pattern of repetitiveness. To be realistic, we can be wrong. We won't risk all our capital on one trade. We have to, however, know we will more than often wait for the market to show us where it will react, and if it does what we think it would have done, then we have a confirmation after waiting for it. We have to have the correct perspective on the market. This trade I have seen forming on the high time frame for a couple of weeks and had to wait very patiently for it to develop. Perspective is not factual until it's been proven. So, to prevent confusion and delusion, we must start with a clear chart and highlight areas of interest. We wait for price to reach our ideal point of interest, and once it behaves the way we want to, our theory has been confirmed, and we have to create a realistic expectation from it. So, depending on your time frame you work from, I work from a high time frame which tends to respect my point of interest more. We can see the following. Okay, this part of the video I'm just going to explain gold trade in the perspective of being patient, having the right perspective on it, and obviously having a realistic expectation on it. So looking at this, we'll see I'm on the weekly chart, and all of us understand order blocks and zones. I saw there is a bit of an order block on the weekly. Scrolled it down to the daily. Now, if you were looking at this trade for the amount of days that it went up, just to give you a perspective on how long these things can run, you can see that this thing has been bearish for a very long time, from first 14 April to the 4th of November last year. And we had another bullish run from 4th up until the 27th of January. So that's a good couple of months. That's about what? 2-3 months. And that's how long these trades can actually run. And to give you perspective on scale, the amount of points we are looking at, let's just measure it correctly. Just clear this chart up. This thing has been up for about 328 pips. That's actually more. It's 3,280 points up. And we expect this thing to go down a lot as well. So how did I find this? Well, I was talking about a point of interest. There's a little candle on the daily, you can see there. Marked it out, and you had to wait for this thing from the basically November last year up until now. I had a confirmation. You can actually scroll down on the lower time frame, 4 hour. There's a bit of a trend line you can draw, and actually that's our sell confirmed right there. So even on the lower time frame you could have scaled in, and as you scale down on a lower time frame, you will see there is multiple ways. It actually started breaking this trend over here, and it retested it right there. There's another zone over there. So that's your first entry you could have taken there. There's an entry right there. Let's just change the color a bit. Let's make this one red. Entry there. Another entry there. And just to give you a target, so we could have adjusted our target to say if it goes out of it, and we can aim for any imbalance there. As long as you get a realistic expectation, and a confirmation is with the break of a trend. You have to be patient for these things because it needs to reach this point of interest, and our theory has been confirmed. So already you are in for what? 3,800 points or 380 pips. That's crazy. So yes, it's possible to make a lot of money on these things. Given you some perspective on the amount of patience that you need, and what is the scale of things on this, and what is achievable. This is very realistic in my opinion. You're going to wait for things, you're going to be very patient for it, but once you get a confirmation, you can let these things be in profit for a very long time. So potentially there's a strategy I've given away for free, and you can scale this down to a lower time frame as well. But remember the points that I mentioned in this video about patience, perspective, and realistic expectations.